Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about U.S. Bancorp Annual Report. U.S. Bancorp offers a wide range of financial services to various clients. The company operates through several segments, including wealth, corporate, commercial and institutional banking, consumer and business banking, payment services, and treasury and corporate support. In the wealth segment, U.S. Bancorp provides asset management and fiduciary services for individuals, estates, foundations, business corporations, and charitable organizations. It also offers investment and insurance products to its customers within domestic markets. The company's corporate segment includes cash management, capital markets, and trust and investment management services. The consumer and business banking segment offers depository services such as checking accounts, savings accounts, and time certificate contracts. Lending services are also provided through traditional credit products, credit card services, lease financing, import/export trade, agricultural finance, asset-backed lending, and other products. In addition to these services, U.S. Bancorp provides payment services, including corporate and purchasing card services and corporate trust services. The company's treasury and corporate support segment offers capital markets, treasury management, and receivable lockbox collection services to corporate and governmental entity customers. Furthermore, the company provides credit card services, merchant and ATM processing, mortgage banking, insurance, brokerage, and leasing services. Overall, U.S. Bancorp's diverse range of financial services caters to individuals, businesses, institutional organizations, governmental entities, and other financial institutions in the United States. The stock price of U.S. Bancorp, USB, has experienced a notable increase over the past year, with various news events and financial performance indicators contributing to this upward trajectory. Analyst upgrades, strong financial results, increased institutional investor confidence, and favorable industry conditions have all played a significant role in driving the company's stock price higher. One of the key drivers of U.S. Bancorp's stock price increase was its robust fourth quarter 2025 results, which exceeded profit expectations and demonstrated significant positive operating leverage. Following these results, several analysts upgraded their ratings and increased their price targets for the company, citing an improved outlook on net interest margin and capital build. In addition to strong financial performance, U.S. Bancorp has also seen increased institutional investor confidence in its stock. Investment management firms such as Exponents Inc. and Insignio Advisory Services, LLC, have boosted their holdings in the company, signaling belief in its growth potential. The company's commitment to returning value to shareholders through dividend hikes and share repurchase programs has also contributed to its rising stock price. Furthermore, U.S. Bancorp's strong earnings per share, EPS, and net income growth have provided a solid foundation for its financial performance. Favorable industry conditions, including anticipated interest rate reductions by the Federal Reserve, are also expected to benefit regional banks like U.S. Bancorp. Lower interest rates are likely to improve net interest income and margins, stabilizing and then reducing funding costs, while projected economic growth is expected to boost loan demand. Overall, the collective positive developments in U.S. Bancorp's financial performance, analyst outlook, and broader market conditions have contributed significantly to its stock price appreciation over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of a company has experienced a significant decline over the past period. Specifically, it decreased by 16%, dropping from $3.1 billion to $2.6 billion. This substantial drop in net income is a cause for concern and warrants further investigation. The decrease in net income can be attributed to various factors, although the exact reasons are not explicitly stated. One possible explanation is that profit margins have been affected, which could be due to increased costs, reduced revenue, or other market-related factors. Regardless of the underlying causes, this decline in net income highlights a need for the company to reassess its financial strategies and make necessary adjustments to mitigate further losses. The financial performance of a company has been analyzed across various regions and segments. The Midwest and West regions have shown strong performance, indicating growth in these areas. In terms of segments, several have demonstrated success. The wealth segment's asset management and brokerage services likely contributed to its positive results. Similarly, the corporate segment's capital markets, transaction, and payment processing services also performed well. The consumer and business banking segment's consumer banking, small business banking, and consumer lending products were also successful. Additionally, the payment services segment's merchant processing services in the US, Canada, and Europe likely generated strong revenue. Finally, the treasury and corporate support segment's treasury management and receivable lockbox collection services also performed well. Management's outlook for the company is centered around several key areas of focus. Firstly, they emphasize the importance of employee retention and development, recognizing that skilled employees are crucial to their success. However, this comes with a caveat. The highly competitive financial services industry poses significant challenges, including increased competition from fintechs and consolidation. The company also acknowledges its regulatory obligations, including compliance with enhanced prudential standards under the Dodd-Frank Act. Furthermore, they anticipate potential changes in capital requirements due to growth or cross-jurisdictional activity, which could lead to more stringent regulations. This is compounded by the risk of increased regulatory scrutiny, potentially resulting in stricter capital, leverage, or liquidity requirements. To mitigate these risks, management has identified several key strategies. These include adapting to changes in anti-money laundering, AML, regulations and incorporating risk assessment processes into their programs. Additionally, they are focused on maintaining robust business continuity planning processes to ensure rapid recovery from cybersecurity incidents. Overall, management's outlook is characterized by a focus on regulatory compliance, employee development, and strategic adaptation to an increasingly competitive and complex industry landscape. The company's financial activities have been notable in recent years. One significant aspect is its dividend payments to shareholders. The company has indeed paid dividends, as stated on page 6 of the report. In addition to paying dividends, the company has also engaged in share buybacks. This strategy involves purchasing a portion of its own outstanding shares from the market. According to the report, the company has bought back a substantial number of shares, with a total of 2,546,428,000,000 shares purchased as mentioned on page 17. These actions demonstrate the company's commitment to returning value to its shareholders and managing its capital structure effectively. That concludes the financial summary for US Bancorp. Feel free to comment below, and I will be happy to answer them when possible.